Was the movement on last Friday on Palantir Technologies stock a typical example of bear trap? This is what I strongly believe, and I'm going to share with you today the reason why. Behind the trade here, welcome back for this quick video update on Palantir Technologies ticker symbol PLTR. As usual, this video is based on a pure 100% technical analysis, and as usual, I just would like to introduce a quick disclaimer. I'm not financial advisor, and these are not financial advices. These are just personal opinions and thoughts. So do your own due diligence and do your own study. Now, let's look at the daily chart and let's look how we closed the last daily session. So the first thing that I would like to mention is that we were able to stay above the $16 for the last 5 consecutive days, meaning that we broke definitely the $18 support, which I consider to be very important, but there are signs that are showing me that this might have been probably a bear trap, probably an action that was aimed to take some stop losses, in my opinion, because we knew from the past that $17 was probably the support that was considered as the main floor from many investors, and I expected that many investors put their stop losses below the $17. So in my opinion, all this movement here was a big bear trap, and this was aimed to take the stop losses and to cancel somehow some investors from the market, because this is where many stop losses were put. Okay, so this is just my personal consideration again, but I think this, for this main reason, if we look at the daily candlestick, we see that on January the 10th there was this interested inversion candlestick with these huge volumes, which were significantly above the average. The next 4 sessions were below the volume average, except for the green candle of the January 11th. To me, the candle of January 10th was the sign that the trend was going to be reversed. Now, let's have a look at the RSI indicator, which is sometimes used as a confirmation tool. And we see here that we have an important bullish divergence because the RSI is doing higher lows, while the price has been doing lower lows since beginning of December. So lower lows in price but higher lows in RSI. So the strength of the seller is kind of fading out. This is the first reason why I think that this might have been a strong bear trap. Now, if we go to the 4 hours chart, we see even a bigger divergence, because we see that this divergence is confirmed. So we see higher lows here, okay, but we see these lower lows here. So higher lows on the RSI, and again lower lows in the share price. This is a very important sign to me. But the most important aspect that I wanted to emphasize on, and that this analysis video update is based on, is this candle of January the 10th. This was to me very important, especially for these volumes here. So keep in mind that we might have found the real bottom once the latest stop losses have been targeted and taken. Okay, let's see how next week will be. Before that, let's have a look just a weekly chart to see we have a kind of spinning bottom candlestick here, and we are approaching the oversold territory in RSI. So this means to me that the market is definitely taking a pause. I expect in the next couple of weeks to see the price above the $16, probably even above the $17 in the next couple of weeks. This is what I would personally expect. This is again just my personal opinion, but I wanted to tell you why I think this. I just want to share with you what's behind this price action. Okay, so all the best for the next week, and thank you so much for watching. And if you didn't subscribe, I would be very glad if you could do that by clicking the button at the bottom right part of the screen. Have a great day and a great weekend.